Ghetto. But we here. We're here and we're back. And my apologies, y'all. So let me pull my questions up again. Okay, third time's the charm. I'm gonna have this together next time. I'm a Zoom girly, okay? I'm trying to do YouTube lives. This ain't for me. But anyway, hey y'all, my name is Joshlyn, and I am the founder of Maximize Money, where I teach women basically how to live their soft lives and be able to afford it. Okay, let's cut to the chase. Yes, we talking stocks. Yes, we talking debt. Yes, we talking savings. But we're gonna talk all things money management so that your 2026 looks much better than 2025, 2024, 2023. I'm not judging because I've come a long way myself. And so I've asked you guys some questions across TikTok and Instagram and on my stories and things like that. So I have about 7 questions here that I'm going to address. And obviously, as you come in, if you have questions, just put a Q in the front and leave the question, and I'll be sure to address it throughout this video. Okay. So we're going to start with what I've already collected from the crew on my socials. And the first question is, what is the first step someone should take when it comes to investing? And I get this question so often, okay, because it's important, and what I answer with is often not what people expect. And that is to make sure that you have some money saved, because investing at the end of the day is a risk. A lot of people feel like they want to just skip over savings, skip over debt management, and start investing. But ultimately, if you cannot live without that money, you do not need to invest in. So what I recommend is that you have 3 months saved, honestly, before you start investing. Because the thing about investing, even if it's real estate, stocks, all that stuff, it is that it's cyclical. So there's up days, there's down days. And if you think of something like real estate, you could have a HVAC breakdown, you can have an HOA fee come up, you can have a plumbing issue. And I say this because I'm a homeowner. So these are things that I go through, but I also invest in stocks. The stock market is going up and down every single day, especially if you're investing in stocks proper, if you're investing in ETFs, which are exchange traded funds. Like, these things are trading all day, every day, and you need to just make sure that you have a cushion just in case, because if you don't, you're going to feel every single loss. All those red marks that you'll see on those charts, you're going to be like feeling it, and that's how I felt when I first started. But I always just recommend to any of my girls, any of my money girls, which are my former clients, and anybody that just asks me all willy-nilly, I say to have 3 months worth of savings, which is your living expenses, and not just in a regular Bank of America. Okay, you need to have it in a high yield savings account, and I'm going to talk about those a little later. But essentially, they work similar to what you'll find at like a Bank of America, but a lot of the banks that offer them actually are online based. So Marcus by Goldman Sachs is my go-to, but there's also Ally, ALLY. But also Capital One has a high yield savings account. I think it's called the Capital One 360. And it's crazy that I don't even use that because I have like 2 or 3 Capital One credit cards. But anyway, that's not the one that I use. And so I highly, highly recommend the first step that you take before you start investing is to make sure that you have some money saved. Like, do not skip over that, because you don't want to lose that money. I have lost money, and I'm going to talk about that a little later because somebody asked me, have I lost money? Of course. Okay, it's investing at the end of the day. So save 3 months, put it in a high yield savings account. High yield savings accounts are free. They do not charge you at all. You can put as much, well, not as much, but you can put a lot of money in there, okay? And you want to just leave it there until you actually need it, like for a job layoff or, any kind of emergency. Don't just be pulling the money in and out, because you're not going to be able to earn interest on it. And so interest is essentially what you receive for having this high yield savings account. So when we think of interest, usually it's attached to like a student loan that we've had, or it's a car note that we have. And as the borrower, we have to pay that and the principal back. But with a high yield savings account, it's the opposite. You become the lender to said bank, and they do whatever they want to do with your money, but they are on the hook just in case they lose it. And so every single month I'm earning money in my high yield savings account by just leaving it there. And I have multiple high yield savings accounts because I have one for traveling and experiences, and then I have one for emergency funds. And if you don't know, or if you haven't been following me, or I'm brand new to you, baby, I got laid off last year at the end of 2025. I was also laid off in 2020. And the difference between where I am financially now to where I was in 2020 is like a 180, because I was not where I needed to be financially. I was literally just getting by in 2020. Like, I had paid off the debt. I was living comfortably, paying my bills, saving a little bit, investing, but not really understanding what that meant. but I got way more hands-on once 2021 hit with my money. I had done a few things, but I was like, no, girl, we need to hit the gas because you can't end up like this again. You can't put your livelihood in the hands of an employer. Like, that's just not going to work. And so, like, I got serious about investing. I got serious about saving. I got serious about money management, which was something I put off in all of my 20s. Okay. So my first step, as I mentioned, is for someone brand new to investing, is to make sure that you have, at least, in my opinion, unless you live at home with family or you're splitting the bills with somebody, if it's all on you, baby, just please have 3 months worth of living expenses saved. Unless you work for the government, but the government ain't even safe no more either. So, I'm just saying. So that was the first question that I got. The next question is, how much should I invest? And my answer to this varies. Okay. The short answer is that it depends on your budget. The long answer is that you want to start small and just stay consistent with that small. So what I recommend for most people is $100. Like, $100 is not something that you're going to sneeze at it because nobody wants to lose $100. But I started my investing journey with just $100. And I wish I had a screenshot of what that looked like, but I'm going to show you another screenshot because I just pulled some screenshots for my 401k. Let me see if I can even do that. Yes, you can. Share your screen. Okay. So I'm going to show you guys what investing $100 looked like for me in the very beginning. So this is how it started. This is very small. Hopefully you can see it. Maybe there's a way for me to zoom in. Present. Okay. So this is how I started with my Roth. So I had a Roth IRA probably since early 2022. Did I do anything with it? No. I just sat on it from 2022 to 2023, which is when I actually started investing the money. Like, I started with $100. But even before I started with the Roth IRA, I had a brokerage account that I had a financial advisor who I still use. Like, shout out to Philip. He helped me really understand the baseline understanding of investing in the stock market. And I learned a lot from him, but I knew that a brokerage account was only one account that was out there, So I was like, okay, I keep hearing about the Roth IRA. I opened one in 2022, didn't do nothing with it. I said, 2023, baby, it's our year, Now, did it happen immediately? No. As you can see, June 13th was the first time that I actually put some money in there. And what do you see? Lo and behold and lo, $100. I put $100 in there and didn't do anything else until a couple of days later. And I put a little bit more in there. Like, I just started to get into the habit. And then I realized that I had old 401ks in other places. And so I rolled my old 401k from a former employer into this IRA. And now I had a larger balance. And this didn't even count against the $7,000 that you were able to put in 2023. But you don't need a lot. I say all this to say that you don't need a lot. And as you can see, I also reinvested my dividends. And so what that means is that a lot of these companies, a lot of these stocks and ETFs, I talk about these a lot, ETFs, exchange traded funds, they pay you dividends. Essentially, that is a small portion of the profit that you receive as an owner of said company, owner of said stock, just for owning it. You don't have to go to work for it. You ain't got to pull up on them in their office, in their corporations. If you own any of these stocks, not the ones listed, even though you do, a lot of mine pay out. If you own select stocks and they pay dividends, just for having those stocks and being an owner, you can get a portion of their profits. Often it's a quarterly thing. And so instead of you having that money sent to your Bank of America or your checking account, you can reinvest it so that your balance in that Roth IRA or in that brokerage account, whatever investment account you use, actually grows. And so that is where I started. I started with just $100. And then I did nothing with that, and then I started adding a little bit more. I started buying things with that money because a lot of people just buy, they put the $100 in there and they do nothing with it. And that defeats the purpose. It's essentially an account that's not doing anything for you. And it's not a savings account. The savings account, you can just put the money in there, especially if it's high. If it's a high yield, you can put the money in there and leave it there. But if it's an investment account, if it's a Roth IRA, a traditional IRA, if it's a brokerage account, you need to do something with that money. And so this is how I started in 2023. Again, I had the account since 2022. I did nothing with it, but I knew to reinvest all that money. Any kind of earnings, any kind of dividends I received, as you can see, I never cashed out on them, because if you do, you lose the opportunity to actually grow your money in real time. That's the point of investing, is to not touch your money, So as you can see here in 2025, as we look at the last quarter, or the last month, I started with I started investing a little bit more. And so my dividends look a little bigger. It's 154, it's 85, it's $40. And again, all of that is reinvested back in because you don't want to touch the money. The point of investing is to leave the money alone and let it grow via compounding interest. And I talk a lot about that as well. But I'll be talking a lot more about that on Invest Your First $100, which is a live workshop that I'm doing on Saturday, January 31st. At 11 a.m. Central, 12 p.m. Eastern, 9 a.m. Pacific Standard Time, because I want to be able to show you guys what it actually looks like in my account. We on YouTube. YouTube is a little too public for me. So I had to pull some screenshots to show you what it looks like. But I want to talk about reinvesting your dividends. I want to talk about what that $100 can do with just one ETF, which is an exchange traded fund, or with one index fund, which is a lot of what I invested in here. But I have ETFs too. Like all of my Roth IRA is composed of maybe 3 index funds and 2 ETFs. Okay. And I talk about what different options are out there. I talk about what I look for when I'm researching these ETFs and index funds. Like I go on a much deeper dive in Invest Your First 100. Again, I want you to be investing before February 1st. Okay. Which is why you come to the workshop on Saturday, January 31st with your IRA already open, because that's the account you're going to use for many reasons. And I'm going to probably do a video on why you should be investing with your IRA and the power of it over some of these other investment accounts. But I want to make this crystal clear that like IRAs are the move. They're tax-free growth, tax-free contributions, and then tax-free withdrawals after a certain age, which is 59 and a half. And I know you probably like, well, girl, that's 20, 30 years from now. Don't matter. Okay. Because the goal is to live till then. And the goal is to be able to live comfortably. We don't want to be working at 59 the way that we working now in our 20s and our 30s. That's why investing is a thing. And so I just wanted to show you what the back end of my account would look like and what it's looking like currently. As you can see, the dividends got bigger from 2023 to 2025 because I started maxing out my Roth IRA. And we're going to talk about all of that too. Like there's just so much to talk about, not enough time. So anyway, let me close my screen so we can get back to the next question that I have. But long story short, invest $100 every single month. Do that consistently. I'm telling you, like that compound interest, leaving them dividends reinvested, meaning not taking them and putting them in your checking account, your money will grow. Okay. Now it's not going to happen overnight. You're not going to hit a lick off $100. Okay. Let's be clear. You are not going to hit a lick off $100. But if you continue to invest that $100 for the rest of 2026 and then increase it over time as you get your tax returns, as you get lump sums from whoever you're getting them from, baby, put that excess that you don't need to live on right now in that IRA, and let it sit there, y'all. Do not try to take that money out and live on it now because of inflation. Inflation is a whole thing, which essentially means that the cost of our goods and services, our cars, even an apple, milk, all that stuff used to be much cheaper in 2023 and 2024, even in 2025. Everything goes up every single year. The rate of inflation in 2025 was 2.9%, which means that whatever you would have bought in 2024 is 2.9% higher in 2025. And I'm sure you know this if you tried to buy a car recently, if you reviewed the price of eggs and milk, like everything is just going up. And that's why you want to leave your money alone and leave it invested so that it can grow and you can continue to live the comfortable life that you live now later on without you having to work as aggressively as we're working. Wow, I got laid off. But as you're working right now, okay? So how much should you invest? $100 every single month. One ETF, okay? An ETF is an exchange traded fund. This is essentially going to allow you to buy a variety of stocks, i.e. companies, have a variety of ownership into multiple companies for one purchase price, y'all. And you can buy an ETF or a fraction of an ETF with just $100. And you continue to invest that until you own the full thing outright. One of my favorite ETFs is VOO. It tracks the top 500 companies here in the US. And if you buy something like that, you have visibility and ownership into the top 500 companies here, y'all. That's the Microsoft, the Teslas, the Walmarts, things like that. Like these are the companies we're already spending money at. Why not be an owner of these said companies and get their dividends? Okay. As they make money, you make money. That's the point of investing, baby. So $100, one ETF, one account. That is literally what I'm talking about in Invest Your First $100. And I'm going to walk you through what that looks like. By the time you get to the class, you'll already have your account set up because I've already broken down in bite-sized videos how to set it up on the back end, how to fund that $100. So when you pull up, all you're going to be ready to do is figure out, okay, how do I buy this? How do I determine if this is a good investment for me? What are the criteria that you look into? Like, how much is this going to cost me? These are the things we're addressing on Invest Your First $100 workshop, which again is on Saturday, January 31st. It's live, okay? We're not going to be on the YouTubes because as you can see, me and YouTube are beefing tonight. But we're going to be on Zoom. I know how Zoom works, okay? We're going to be on Zoom. It's going to be a small group of us. It's not free, okay? But the link will be somewhere. Maybe I should put it in the description. I'm so excited about this because it'll allow me to actually like talk to you guys in real time. You know, you'll be able to ask me questions in real time and you'll be able to walk away with your first $100 invested in real time. And that's what I'm about, okay? So I'm going to make sure I pin this. Perfect. Okay, so yes, that is what we'll be discussing. And again, $100, one investment type, which is usually an ETF because it's super user-friendly. It gives you visibility into multiple companies and, you know, one account, which is your Roth IRA, or if you make over $150,000, a traditional IRA. But all of this will be broken down once you get your ticket, baby. So yeah, that's what I recommend. The next question that someone asked is, how long did it take you to reach $250,000? And they're likely referencing that I always talk about like how my stock portfolio is worth $250,000. And I want to make that clear. That's across multiple accounts. That's not just all in my Roth IRA. Okay. My Roth IRA probably got like $40,000 in it, but I have old 401ks. I have the brokerage account that I mentioned that I started back in 2018 with my financial advisor who I manage all my stuff now, but when I started, he was managing it all for me. I also have, as I mentioned, 401ks from former companies that I need to be rolling over. I was supposed to do that today too. Anyway, we're gonna work on that. So this is across multiple accounts, and I need to make that crystal clear because it's not all in my Roth. I do max out my Roth, which means that I contribute up to whatever the maximum amount is for that year. In 2025, it was 7,000. In 2026, it's 7,500, which means I want to put $7,500 in my Roth IRA in 2026. Now, how are we going to do this? A wing and a prayer, because I don't even have a 9-to-5 right now. But God is going to bless me and I'm going to out earn my salary this year. I already got 2 business opportunities in my email that I'm excited about, but I can't talk about those until they're signed on the dotted line. But it's January 2nd and God is already blessing us, okay? God is good. But anyway, it took me, I started in 2018. So that means going into the 8th year, now that it's 2026, it took me 7 years to get to $250,000. And that came from, again, multiple sources. My first thing that I managed on my own is, again, that brokerage account that I co-managed with my financial advisor. I also had 401ks. I have been investing in my 401ks since 2012. You know, like whenever they had them available, because for a long time I didn't work at companies that had 401ks. You know, once I got started getting big girl jobs, I knew that the 401k was something I needed to be using. My mom made that crystal clear. Did she know what the hell it was? No, but she was like, you need to sign up for the 401k and get the match. I knew what the match was. And so it took me since 2018, you know, and I have maxed out my Roth IRA for the last 2 years. I have not maxed out any of my 401ks because, I mean, who has $23,000 laying around? Not me, you know, but I do contribute up to the match. And so for all of my former companies, they matched 50% of whatever I contributed. So if I put in $300, they'd give me $150 as an example. But yeah, it took me seven years, you know, 7 is the number of completion. So it takes time, you know, and my fire number, which means that I could not work and not run the business and do none of this. My fire number is $2 million. So I'm nowhere near being able to not work. But the beauty of investing is that, like, I was able to earn all that by living my life, by traveling, by resting, by sleeping. Like, it didn't turn into another job to do all these things. I just did what was available in the companies that I worked for and with the money that I was earning, you know. People sleep on them 401ks. There's so much power in 401ks. And that's where most of my money lives, even today, 2026. Most of my money is in former 401ks. Like, they easily are outpacing my Roth IRA, but I don't have control over those. I have control over my Roth IRA and my brokerage account. So those are the ones that are in my HSA. And that's an advanced strategy. We can't even talk about that today. But HSAs are not just for medical expenses. I really need to do a video on that because somebody asked me about it last year and I never prioritized it. The next question, as I alluded to earlier, is have you ever lost money? And the answer is yes. I don't know about the people online lying to y'all, telling y'all they ain't lost no money, because I've lost money. Now, the beauty of investing and the way that I invest, because I'm not the type that just be buying Google and Meta and Apple individually. I buy everything in the form of an index fund, which is very similar to an ETF, an exchange traded fund, which allows you to have ownership into multiple companies for one purchase price. It lowers your risk tolerance, because if Apple tanks, but Microsoft and Google and Meta are killing it that day, you won't feel it because you have ownership into multiple companies. Diversification is the name of the game when it comes to investing, especially if you want to invest the way that I invest, which is the lazy girl approach. I'm not about to sit here and be reading stock charts. I know what all these companies do. I know how they make money. They make money off you and I. So I'm going to just make sure that my money is spread across all of those so that I'm not stressing if one of these companies has a bad day, because I still have ownership into all these other companies. And so, yes, long story short, I lose money, but I also have out earned my money. I've always gained it back in some way. 2020 was rough because it was a pandemic, and anytime like the market economy is going down, that's not a good sign. But I also didn't use those opportunities to force a sale. Like, because when you sell your investments, especially if you're doing it in a non-tax advantaged account, which is a lot of brokerage accounts out there, if you sell, you have to pay capital gains, which means that you have to pay a portion. You're basically taxed on whatever money that you earn from selling those investments. And when I heard about that, I said, well, I'm just hold on to stuff and just stop buying it, and I haven't sold anything. I haven't sold anything in a long time because of that. Now, my financial advisor, he has bought and sold a lot of things, and I've just have been taxed on the back end. But that's probably why I'm not working with him no more. But shout out to him. He's actually a really good person. We be iMessaging, okay? Like, it's nothing against him. I figure he just sets up the tax loss harvesting on the back end. So it actually kind of works itself out. And so what I do to ensure that I'm not losing too much money is I actually track my money every single month. So every month, like just like I manage my monthly expenses, I have a whole spending plan template. It's likely somewhere in the description. I don't even know how to double check, but if you don't see it, just comment below or comment in the chat and I will send you the link. And it's free to download. The same way I'm tracking that, which is my money coming in, my money going out. I track my investments. So I look at the balance and I look at the performance of all of my investments across all of my investment accounts. And if I'm seeing a big drop somewhere, then we need to continue to monitor that. I don't rush to sell. And if just because I had a bad month doesn't mean I'm going to have a bad quarter. So it's rare. Like I know one time last year, I had tried to move money from a target date fund in my 401k into like individual or index funds. And that wasn't a good decision. It wasn't a good decision. And so I just moved them right back into the target date funds. And if you don't know what those are, just comment below or comment in the chat. I will address them. I think people are pretty familiar with those. So I won't go into a deep dive of those. But how I ensure that I don't lose too much money is I track my money. I track my investments. I track the balance across all of my portfolios or all of my investment accounts. And as long as they're trending up, I'm okay. I don't trip about like one index fund or one ETF not doing too well unless it tanks $10,000-$20,000. For the most part, it's usually a couple of hundred. And again, that'll often bounce back up because again, investing is a cyclical experience. And so how I ensure that I don't lose too much is I track my money monthly, just like I track my expenses monthly, and as long as things are continuing to trend up or they're remaining stagnant, I'm okay. The next question is, what would you tell someone that is new to finance and wants to get better with their money? I have 3 tips because I'm so passionate about women really getting their money right. Okay. It's literally why I started my brand, Maximize Money. And I was giving away a lot of free game. But over time I said, okay, girl, folks ain't taking this serious. We got to start charging them, and shout out to my original money girls who have been around, since 2022. Okay. We ain't new to this. We true to this. So my first tip for someone who is new to finances and want to get better with their money is number 1, to address your mindset, because a lot of times we psych ourselves out of the things that we really want. Maybe it's because of your environment, maybe it's because of something that's been said, maybe it's because you grew up below the poverty line. Like, there's many reasons why things don't, work out for us, and a lot of it's out of our control. But I always say, once you are an adult, okay, once you are over 26, which is when you're usually kicked off your parents' insurance, you are responsible for your decisions, okay? Like, you are responsible for your decisions. And if you don't feel like you can do better, if you can advance in with your money and your career and life, all the things, you won't. And so for me, like, I had to spend probably 20, like, I got serious about my money management in 2017, which was when I moved back home to pay off $80,000 in student loans. And instead of, and I hated living at home, let's be clear. It's not that I hate Oakland, love my town, love the town. I just hated living with my mom because I was an adult. I was an adult at that point, knocking on 30. Okay. I was turning 30 when I moved back home. Just to show you, all my real money moves came after 30. They came in my 30s, and I'm 38 right now. But the biggest thing that I worked on while I was living at home in prison, I love my mom, but we just can't live together, but was my mindset. I read a lot of books. I was just renewing my mind, because I'm like, God, I don't want my 30s to look that like my 20s. Like, I was not a good steward of my money in my 20s. Like, I looked up and 30 was here. I had nothing to show for it. I had these random 401ks. I had a little bit saved. Like, I had a car note. I had all this student loan debt. I couldn't even buy a house. I couldn't live on my own. Like, it just was not a good situation. And I was like, okay, God, like, I need my 30s to look better. Like, I need a 180. And I'm so thankful to be living in it now. But like, I was just like, me 10 years ago, it was not a good look. Okay. So I spent 2017 to probably 2019 in phase one of my financial stability freedom journey. By 2019, I had paid off my debt and I had moved to Houston. The second thing is, addressing your environment and your habits. So I say I moved to Houston because I felt like I was diligent with my money. I had my account set up. I had started investing in 2018. I had paid off my debt by the end of 2018. I had started saving. Like, that's when I opened my high yield savings account, and I was like putting money in there consistently because I knew that I was getting ready to move. I knew I didn't know where I was going. And again, God works in mysterious ways, because I literally, like, 2018, I had paid off my debt. It was like November, probably like November 29th. I need to start celebrating that day because it was $80,000, child. And then December, I went to Spain. And that was a work trip. I mean, Spain wasn't work. We went to Germany, but we made it a work trip on the side, me and two of my coworkers. We made it a fun trip. And then I was just texting like one of my good friends who had just moved to Houston. And I had told her, like, I'm gonna be in Dallas in January. Or was that January? I don't know. But anyway, I think it was January. Girl, no, I don't know. No, because we went to Mexico. Anyway, I was texting my friend, and she basically was like, I think this happened a year before. So maybe 2018, this had happened. And I had told her, like, I was getting ready to, pay off the rest of my debt in 2018, because this was in January. I remember because it was Cash's birthday, which was one of my good friends. And she lived in Dallas. She still lives there. And so I had told her, like, hey, I'm going to be in Dallas, like, let's catch up. We're in the same time zone. She was like, girl, just come down here. Dallas is a hop, skip, and a jump. And so lo and behold, and lo, she was plotting to get me to move to Houston. So she showed me all the hot stuff. We went to all these restaurants, all these bars. The guy she was dating at the time, he was just treating us well, and was like, she really wants you to move here. You should strongly consider it. He started listing all the reasons why I was looking to move, that clearly she had told him. It wasn't anything personal. Like, it just was like, I want to live a better life in my 30s. I want to buy real estate. I wanted to be investing. Like, I just wanted to live comfortable, and I knew I couldn't do that in California with the salary I was making. So I was like, okay. So I just left it on my little potential list, but she kept checking in with me. And so by the end of that year, I was in Spain, like, going back to the story, with my coworkers on a work trip. And she had sent me like some jobs, and then I had found some other jobs, and we were just up. We had went out, had some wine, and came back in, and I was just on my computer just typing away, applying for these jobs. Two of them ended up hitting me back. And one of them offered me a role, and that happened in January. I went out there to interview for the role, and I had it by the end of January. I was moving to Houston in February, and that was just so scary because I had only been to Houston that one fine. But I was like, okay, God, like if it don't work out, like I could just go back home or I can go to Dallas. I had a lot of family in Dallas, or I can go back to DC, which is where I was living out. DC is Houston's my second home. I gotta stop saying this. But DC, the DC, Maryland, Virginia, that was my second home. Like that is still where a lot of my friends live, shout out to the DMV. But I was like, okay, I'm gonna just give it a year, and if I don't like it, I can leave. Like I don't have no kids, ain't nothing tying me in Houston. And that was in 2019. It's now 2026. Like I've been here ever since. And so I would say to adjust your mindset. I would say to adjust your environment and your habits, because when I moved here, it was like, okay, new year, new me, new city. Okay. I was outside more than I should have been. I was out on a Tuesday and if you know anything about Houston, you know how that is. Okay. People are outside from Sunday to Saturday. Now I don't do that. I ain't been out. When was the last time I went out? It was early December before Christmas. And that was to Urban Smoke. Shout out to Urban Smoke. Outside of that, like I haven't been out. That had to be like December 15th. It's now January 2nd. Like, so once I was here for that first year, I kind of went all in. I was just doing all the things, and I started to slow down on my savings. I still invested, but I slowed down on my savings. And I hate that because 2020 I got laid off from my job. So those habits that I was already building took a pause because of this new transition in my life. Now, granted, I was able to pay my bills and things like that, but I knew that I could have been doing a lot more with my money. And so I was like, okay, girl, here we are again. Here we are again. Okay. We're not moving back home. We're going to figure out what the hell to do. And so while I was laid off, I did a lot of smoking. I did a lot of drinking, but I did a lot of praying. And I was like, God, this is the second shift in my life that I felt unprepared for. I don't want, I did well starting my 30s, and I was like, I have to get back on my Zoom, And so I used, the first 6 months were a blur. Okay. I was not in a good place mentally. But around like November, I said, okay, girl, let's lock TF in. And I started like reading the books that I had already. I started subscribing to different podcasts. I started my own podcast for accountability. And by January, I had a new job. And with that new job, I had already outlined my financial plan. I was like, okay, girl, we're going to get serious about investing. Like that $100 was not enough. With this new job, you're going to be investing this much. With this new job, you're going to be saving this much so we can get a house. With this new job, we need to build an emergency savings so that if we ever get laid off again, we ain't struggling. You feel me? Because I struggle with that first one. And so my habits, you have to track your money, okay? Which is leading to the third tip, which is tracking. A lot of people don't even know what's in their bank account. A lot of people don't know what's coming in and going out of their bank account. You don't know what's your credit card. Like there's just so many things that you keep covered. You cover your eyes. And I know that because y'all tell me. And I used to tell myself, that's why I'm so freely with my story, because people feel like they have the worst of the worst, and baby, you do not. Everything you think is worse for you, I've already been through. So you don't have to. And so the thing that you need to do is you need to track your money. You need to track your spending. I have a spending plan template. It's free to download, okay? If you don't see it somewhere in the chat or in the description, just comment. I will send you the link, okay? It's free because I need you to be tracking your money. Enough people do not track their money, and you wonder why you wake up at the end of the month with nothing left, or you get laid off and you ain't been saving, or you want to invest, but you don't feel like you have enough. You actually do, babes. You just start spending the money before you even get it. Ask me how I know, because that was my life. That was my 20s. And so those are the three things I would say for someone who's brand new to just finances and wants to get better with their money. Address your mindset. Whatever you don't believe is possible is not possible. You have to think abundantly. You can't think from a scarcity mindset. And I say this because my mom had a scarcity mindset, which means I had a scarcity mindset. And I was just very like tight with my money. Either I spent it or I was tight with it when I got it. And I was like, no, girl, like money continues to flow to you. If you do a good job with managing your money, more of it will come, and that's biblical, like God blesses us with money so that we can be a good steward, and he can't bless you with more if you're not being a good steward of it. So once I learned that, baby, I was tithing, I was saving, I was investing, I bought my house. 2021 was a good year. A lot of money moves happened that year. I bought my house. 2022, again, I opened that Roth IRA. I increased the $100 to $200 with that brokerage account. Like baby girl wasn't playing, and each year I've just compounded on that. And I've had moments where I overspent. I took trips that I probably shouldn't have taken, but it's nowhere near I was where I was in my 20s. Like, I always had a plan to reset when I came back if I spent too much. Now I don't do that no more. Okay. That was 2023, the last time I took a trip that I couldn't afford. But 2024, 2025, we take trips. We actually use points and miles for these trips. So a lot of this stuff is free. And then the third tip, as I mentioned, is to track your money. Again, I have a free spending plan template. You can't change what you don't track. Sorry, y'all, we got 35 minutes, but we're going to get into the rest of this. I have, okay, there's 3 more questions, but I feel like we've been yapping. I've been yapping. Maybe I'll save these for another live because we're already at 35 minutes. But in the meantime, continue to drop your questions in the chat. If you come up with any other questions as you listen back to this, shout out to the replay game. Comment them, and I will do another one. I will be better prepared, y'all. I'm so sorry for all the technical difficulties. I didn't know that if you schedule one on mobile that you'd have to do it on mobile, because I like to do stuff on my computer. I'm an elder millennial. So anyway, the link to invest your first $100 workshop is in the chat. This is live. It will be on Zoom. There will be no technical difficulties because I know how Zoom works. Okay. YouTube Live is a new little ballpark. I'm not a fan, but now that I know what to do, I'm going to do another one to make up for this one. But yeah, leave your questions below. Let me know if anything in this chat didn't make sense. And I'll be sure to do another one and have my affairs in order, because usually I'm not that girl. I be having my affairs in order. But YouTube, trying to go live on YouTube is not that easy. But now that I know, I will move accordingly. So thank you so much for watching. And again, leave any questions or comments below. Please share this with someone. Comment, if something doesn't make sense, comment. If you have additional questions, comment. I just want to make sure that this information is out there. I'm looking forward to seeing you guys on Invest Your First $100 workshop. This is women only. Okay. Sorry to the fellas. If you need a financial educator who services men, I can share some with you. I know some good ones. Because good people know good people. So anyway, I'm going to log off and enjoy the rest of my Friday. And I will see you guys whenever I do another one, child. I might end up doing these every Friday for the month of January. If I should, let me know. And again, I will have my ish together. Okay. I don't like not being prepared. So have a great rest of your night. Happy New Year. I hope that you learned something tangible on this live. And I will see you on the next one, baby. Make sure you subscribe to my channel too, because I'm trying to grow. Okay. Bye, you guys.